Joining me now with his 5 picks, Shay Boloor, Chief Market Strategist at Futurum. Shay, thanks so much for being here.
Thanks for having me.
All right, so let's get right into it. You have 5 picks that sit in different parts of the digital and AI economy. First up, one that we talk about quite often here, and that's Palantir. Why do you like it? Because it was well loved and it's fallen out of favor a bit?
Yeah, I'm having a bit of deja vu because it feels like it's back to 2021 when everyone was calling Palantir a black box consulting company. Now I feel like I'm fighting again on why they are one of one. And I think Palantir, nobody's doing AI better than Palantir right now. And I think it's because they sit in this bottleneck that they have a monopoly in, which is called the orchestration layer of the neogenetic stack, where you have, on one force, you have these powerful and increasingly cheap models, and then on the other side you have the valuable but messy enterprise data. And Palantir sits in the middle because they're the decision layer for organizations on what to do with all this information, all this data. And they're showing it in the fundamentals. Like, very few software companies out there are actually proving that AI is an accelerant for them. Palantir, everyone in the street was expecting a deceleration this year. Palantir re-accelerated 60% growth, while also increasing their margins to 70%. And this is not a cyclical business. This is a recurring commercial enterprise. So I think right now it's a classic example of sentiment followed price action. And I think you have some prominent figures like Burry just yelling that this is a bubble, Palantir is a fraud. Like, he's not saying fraud, but essentially he kind of is right now. And I just think that that's noise. Listen to what Dr. Karp is saying, and things are going to be A-okay for Palantir.
You mentioned the monopoly, though. Palantir also has a whole bunch of government contracts. Does it have any competition for those government contracts at this point?
If there is, there's no evidence of it. And I think that's kind of the monopoly status that, it's not the monopoly status, it's more of the pricing power that Palantir will continue having in the AI economy, where they're decades ahead of everyone else. So maybe eventually there's going to be a second source, maybe a third source, but we're years and years away from that, and there's been no evidence of that actually happening. And Palantir's AIP has been out for years, 3 years, I think, as of this moment. So right now, I think they have a monopoly, and it's here to stay.
Okay, let's move on to number 2. That's Snowflake. Speaking of stocks that have fallen out of favor, why is 2026 a comeback year for Snowflake?
AI systems cannot work unless you have large, organized data sets. And I think Snowflake has a duopoly in that lane with Databricks, which has the luxury of being private. But Snowflake, there's been no evidence of any kind of deceleration from AI for them. The biggest argument has always been, like, why isn't there a re-acceleration like we're seeing in other software companies? And I think you're seeing evidence of that already. Last 2 quarters, the RPO has been re-accelerating. And I do think that's signs that large clients are signing with Snowflake. It's just they're more in this experimental phase. And I do believe that the agentic AI moment we had last month with Claude Cowork, ClaudeBot shortly after that a lot of enterprises are adopting AI agents especially, and AI agents are just millions of small, always-on AI, and that's going to increase the data at a rapid pace. So Snowflake is one of the few companies that are going to benefit from that data gravity.
Okay, moving on to Cloudflare, number 3, ticker symbol NET. You call this one the gatekeeper of the modern internet. Does Cloudflare win regardless of who wins the AI race?
Yeah, they are the picks and shovels winner of the agentic AI, and the reason I say that is they control 20% of the internet right now. So like I mentioned with Snowflake, last month revealed that we're at that inflection point for AI agents. And what that means, millions of small, always-on agents, that's going to increase the traffic for the internet. And Cloudflare's whole spiel is having the inference as close to the edge as possible, which means that these models reduce the latency risk associated with them, because the killer for AI models is the lag time between typing something in, having them do it, and then the orchestration of it. So I think Cloudflare CEO Prince talked about how January alone, the traffic for AI agents doubled. That shows to me that the thesis is real. They're seeing a tailwind in that thematic, and it's here to stay. So I think OpenAI acquiring ClaudeBot Creator is showing you where AI is moving right now.
But aren't Google and Amazon creating their own security layers? How much of a threat would that be?
Pie is so big that Cloudflare is going to be able to benefit, but that is a real risk. I think Prince has been targeting Google specifically on that. There is a monopoly status that they're having right now in search and the internet that has to diminish for the democracy of what the new digital economy is going to be. So that is an absolute risk, but it's been a well-known risk for years. So this is just more the pie's getting bigger due to AI agents, so Cloudflare will benefit.
Okay, next up, DigitalOcean. You call this inference cloud for builders. Why are you bullish on this name?
Yeah, so DigitalOcean has been labeled as this AWS-like business when I do believe that's just low-hanging fruit, offsides narrative. When really, if you look into what they're doing, is they're positioned for this agentic AI environment where, like I mentioned earlier, small, always-on AI agents are going to be running permanently. What are they going to need? They need to find a home for low-cost, durable cloud services. So DigitalOcean is built for this always-on software environment, and again, they're one of the few AI players that actually have proven in the fundamentals that this is going to be a massive tailwind for them. The past 2 years, top-line growth is supposed to be low teens. Next 3 years, management's estimating 20% CAGR, on top of having a 40% EBITDA margin. But this is a company that has no premium. It's being traded at under 20 times EBITDA multiple. So the re-rating has massive runway, and I think that you're seeing signs of the relative strength this year that this is, again, one of those picks and shovels AI agent winners.
But you mentioned AWS. Why bet on DigitalOcean instead of an AWS or an Azure?
They're pricey, and I think that you're seeing that there's going to be millions of agents being operating. You don't need the best of the best for the cloud services for those AI agents. You just need the good enough, the durable ones. And that's essentially the lane that DigitalOcean has been operating in. But now, the amount of SMBs are going to explode, 1,000x, and that's going to create a huge tailwind for maybe a small fish in a big cloud services provider ocean, but it's a juicy tailwind for them.
Okay. Your last pick was a surprise to me, a new one at least for my watch list, and that's Jumia, J-M-I-A, scaling logistics across Africa. Why does this need to be in our portfolios?
I think Africa's finally ready for e-commerce. I think the whole issue for Africa has always been they've been the wild, wild west. And what I mean by that, there's minimal roads that are actually operating in the region. Some addresses don't even have numbers or street names. So you can't just throw money at this region. Like the Alibaba have tried, Temu has tried, Amazon has tried. Being able to operate in this home base for years has given Jumia the ability to know what the regional specific needs are. And the data is finally backing up. The past year alone, you've seen GMV go up, you've seen orders go up, you've seen repeated orders from customers returning, while fulfillment cost per delivery has decreased. Very rare combination to have that in a marketplace, especially this early in an emerging market like Africa. And I think that they just produced 30% growth in the top line, going to be profitable by the end of this year, and they're worth $1 billion. You just don't get this combination as a category leader in an emerging market with near-term profitability and actual growth stock. So I think that this is a name that if you are betting on the highest growing e-commerce market for decades, this is a category leader that is hitting an inflection point that once they have that break-even quarter, I think it's going to symbolize this is a new company than it was back in 2021 when it was labeled the Amazon of Africa and the bubble burst in SPAC. This is a totally different company. They graduate from that, and I think they have plenty of runway.
Yeah, and it sounds like some boots on the ground advantage over Amazon. You don't really hear too many David and Goliath stories of people going up against Amazon and potentially winning. So just quickly, are these long-term holds for you, or are these trade around volatility kind of plays? Yeah,
these are all multi-year horizon. I think that we are in the beginning of the largest industrial build-out of mankind's history. And what I mean by that is, right now there's a game of hot potato a bit. The bottlenecks are shifting, like there's more themes that are getting created. Just 6 months ago, I think that Cloudflare and DigitalOcean wouldn't even have these kind of tailwinds, for example. Just last month, the AI agent had that ChatGPT moment, so like it accelerated their inevitability of their TAM. So again, I think these are long-term investments, especially when you factor in that these are companies that are under $50 billion, most of them, and they have niche TAMs and competitive advantages that have plenty of runway to operate in.
Which one has the most upside from here? Which one has the most risk associated with it?
I think Jumia has 10x potential at this price. And I think that if they execute where I think that management has communicated they're going to, they are going to be substantially higher. If you want to ask for the near term, like 1 to 2 years, I think DigitalOcean. I just think that when you have 20% CAGR with 40% EBITDA margins, and you're operating in probably the sexiest part right now in the AI economy, which is cloud computing, you deserve to have somewhat of a premium. And right now, being traded at under 20 times EBITDA, I think there's a re-rating for a 2x potentially by 2027.
And the most risk?
I've got to say the most risk is Snowflake, unfortunately. And the reason for that is if your AI product is purely digital, it doesn't touch the real world, you are at risk a bit from the AI tsunami that's coming. That's why software's getting re-rated. And Snowflake has durability of the new AI economy, but they are purely digital. So there is going to be a risk that maybe they aren't going to catch the tail end that I anticipate they're going to.